If you've been watching the crypto market lately, you're probably feeling some serious whiplash. I mean, one minute we're hitting record highs, the next a dizzying drop. It's confusing, it's volatile, and man, is it loud. Okay, let's dive into this and figure out how to separate the real signal from all that noise. So here's how we're going to cut through the chaos. First, we'll tackle the market's mixed signals, that whiplash feeling. Then we'll dig into a massive regulatory green light that I think is the real story here. After that, I'm going to give you the tools to decode key indicators for yourself. And finally, we'll look ahead and chart out what the next phase for the market might actually look like. All right, so let's just start with what everyone is feeling right now. It's a classic crypto roller coaster, and it is so easy to get lost in all the day-to-day drama.
I mean, it really wasn't that long ago, back in late January, that the market was absolutely euphoric. Bitcoin just smashed through its old records, hitting an incredible new all-time high of over $109,000. The excitement was just off the charts.
But just as quickly as the party got started, it felt like the music stopped. By early April, the price had plunged over 30% from that peak. That's a brutal pullback that shook out a lot of confidence and left a lot of people wondering, hey, is the bull run over? And this is where things get really interesting. Take a look at the market sentiment. The Crypto Fear and Greed Index is sitting at just 28, which is firmly in fear territory. Now think about that disconnect for a second. Prices are still pretty high, historically speaking, but the emotional state of the market? Deeply worried. This might suggest that smaller, retail investors are selling out of fear, even while the bigger picture could be getting stronger. And that right there is the crucial point. These dramatic price swings, these emotional reactions, that's the noise. It's distracting, and it can cause us to make some pretty irrational decisions. So the real question we have to ask ourselves is, what's the underlying signal we should actually be paying attention to?
And that brings us to what I think is the most important part of this whole story, the foundational stuff that's developing way behind the scenes, away from the daily price charts. Let's just forget the noise for a minute. This is where the real signal is.
This right here, this headline might be the single biggest crypto event we've seen in months. The CFTC, that's the U.S. Commodity Futures Trading Commission, has officially given the green light for spot crypto trading on regulated exchanges. This isn't just another headline, folks. This is a foundational shift in the market structure. So why is this such a game changer? Well, because it removes this massive regulatory gray area that has kept so many big institutions on the sidelines. It gives a clear answer to who regulates what, and it paves the way for new, trusted products. For the first time, really, big money doesn't have to fear the unknown. This is the very bedrock of institutional comfort. And this just brilliantly illustrates the impact. According to Fidelity, at the start of this cycle, only one public company held Bitcoin on its balance sheet. Just one. Now, over 75. This is what happens when the foundation gets stronger. The big players feel safe enough to finally jump in. So let's be crystal clear. The daily price chop, that's the noise. This growing regulatory clarity and the institutional adoption that's following it, that is the signal. It's a structural shift that says loud and clear, big money no longer has to fear the regulatory unknown. Okay, now that we've identified the signal, I want to give you the tools to spot these deeper trends for yourself. Seriously, understanding just a few key indicators can completely change how you view the market. We've already touched on this, but let's really break it down. The Fear and Greed Index is basically an emotional barometer for the market. It's on a simple scale from 0 to 100, and it analyzes everything from price volatility to social media chatter to figure out one thing. Are investors acting out of fear, or are they getting way too greedy? And here's the cool part, how to actually use it. When the index shows extreme fear, it can be a sign that investors are way too pessimistic, which, for long-term thinkers, could present a buying opportunity. On the flip side, when it shows extreme greed, that's a warning that the market might be overheated and due for correction. All right, the second key indicator is Bitcoin dominance, or BTC.D. It's actually really simple. This just tells you what percentage of the total crypto market's value is locked up in Bitcoin. It's a fantastic barometer for the risk appetite in the market. So, let me ask you this. If you see Bitcoin's price staying pretty stable, but its dominance starts to fall, what do you think that means? I mean, where is all that money going? Well, it often signals the start of what we call an alt season. It means investors are feeling greedier and are starting to move capital from the relative safety of Bitcoin into smaller, riskier altcoins, all in the search for higher returns. Watching this metric can give you a huge insight into the market's underlying mood.
Okay, so we've separated signal from noise and we've learned how to read the market's mood. Now, let's put it all together and chart a course for what might be coming next.
Now, according to analysis from Fidelity Digital Assets, all this volatility we're seeing might not be random at all. It could be a sign that we're entering what they call the acceleration phase of the bull market, a period that has historically been marked by exactly this kind of intense, choppy price action right before a final surge.
Looking ahead, Fidelity points to two massive factors that are going to shape the future. The first is that trend we already talked about, that explosive growth in corporate adoption. The second, and you could argue it's even more transformative, is the growth of stablecoins.
And this isn't just about crypto trading. As Parth Gagarva from Fidelity Labs puts it, stablecoins could become the very backbone of global money transfers. Get this, in 2024, their transaction volume already blew past that of Visa and MasterCard combined. Just let that sink in. This is about re-architecting finance itself.
But for this whole revolution to happen, regulation is absolutely key. In the US, all eyes are on a critical piece of legislation called the Genius Act. It's already passed its first vote, and a second decisive vote is coming up soon. The outcome of this vote is a huge event that everyone should be watching.
You know, the future of this multi-trillion-dollar industry really hinges on getting this right. Passing the Genius Act would unlock the full potential of stablecoins. And since Ethereum is a major hub for all this stablecoin activity, its success is also tied to getting clear, supported regulation.
So, let's bring it all home. Yes, the market is noisy, it's emotional on the surface, but underneath all of that, the foundation is getting stronger every single day. Regulatory clarity is finally arriving, institutions are buying in, and these transformative technologies like stablecoins are on the verge of a massive breakthrough. It really begs the final question. With all this foundational strength being built, is the real, sustainable bull run only just beginning? Now that's the signal to think about.